Okay, so welcome to the recorded lecture all about infrastructure credits. Okay, so when you talk about infrastructure credit, you have to determine first or shall we say, the company has to determine what are the prescribed infrastructure development credits or credit development that they are allowed to. Now, for this infrastructure credit, we have the taxpayers who are engaged in mining, petroleum, or gas operations, and also those who are engaged in primary production, and taxpayers engaged in tourism. So they're allowed to use these infrastructure credits against their tax payable to reduce their tax liability. Now it should be noted that it should be eligible expenditures. Okay, they cannot just uh, provide infrastructure or spend money on infrastructure, and then they will try to use that as their tax credit. So you have to determine first what are the prescribed infrastructure development. Now to calculate, this is how you determine what will be the amount allowed as credit. So the amount should be lesser of the actual amount spent, and then against in case of a taxpayer engaged in tourism and primary production, that will be one uh, the amount of tax payable, or 1.5% of the assessable income. So meaning you have to compare three amounts: actual payment, the taxable or tax payable, and then 1.5% of the assessable income. Okay, so this is for tourism and primary production. Almost the same with taxpayers engaged in mining, petroleum, or gas operations, but in this case, the percentage will be 0.75% of the assessable income. So if the taxpayer's expenditure in a particular year is less than these limits, the excess can be carried forward for a period of 2 years. So if in case the actual amount uh, is more than the lesser amount of these three, then the excess can be carried forward for 2 years. So what are the prescribed infrastructure development for resource projects such as mining, gas, and petroleum companies, and then primary producers? So these are the main categories, shall we say. We have schools, aid posts, hospitals, roads, other capitals or capital assets, as well as these maintenance. So if they are building a school, and then also they spend on maintaining this asset or the school building, then they can claim that as uh, infrastructure credit. Now, of course, beforehand, it must be approved by the department responsible for national planning matters, and all subsequent expenditure must be certified by both department and the IRC as have been incurred. Capital projects that are required to be built under a resource agreement are ineligible for the credit. Now, for tourism industry, the infrastructure tax credit scheme only extends to those who qualify as a large-scale tourism investor. So if they are classified as a small-scale tourism investor, then they cannot claim for this infrastructure tax credit. Okay, so let's look into a sample problem here. We have a PNG resident company which involved in the mining of iron ore. Of course, in its project, it says here that they build some roads for displaced local communities. So the cost of that road, those roads, is 540,000 kina. Now, we were provided with the information of the assessable income, 37 million kina, and then the taxable income calculated before deducting infrastructure credit will be 1.4 million. So we are required to calculate for income tax payable. Okay, the solution. So first we have to find out how much is the uh, possible infrastructure credit, okay, with the percentage of 0.75. Again, this is a mining business, so we use 0.75%. So we have 227,500 for that. The second amount that we will consider here, tax payable, we have taxable income. Then multiplied by 30%, we have 420,000 kina. Then we were given the actual amount of 540,000 kina. Now we have to select the lower or lesser between these three. So we got 227,500 kina as our tax credit. So in calculating the net tax payable, we have 420,000 kina less 227,500 kina. So we got 192,500 kina. So that's how you will solve this type of problem. So be mindful that there will be three amounts that you need to check and verify. Then you have to determine which will be the lowest among these three. Then that will be the tax credit. Alright, thank you for listening and watching the video. Hope you learned something.